Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed markets around the world today, with most spots in Europe being closed for the holiday. So not too much going on overseas. Scott, how does the landscape look to you?
The landscape is still strong. They lost a little momentum last week, but
Yep.
kind of intact or in stride. So I'd say the theme for overseas markets are still in stride. Lots of sectors lost their 8-day moving average, but most held the 21-day. If you look at the chart of the FXI, you will see that over in China, you did have a huge move lower, and it did start to bump into some, actually, it did take out this descending channel here, look at that, and bumped into some bigger resistance right here. But all in all, still in this ascending channel and hasn't broken it. If you take a closer look here, you'll see that it did break the 8-day moving average, but held the 21-day. So I would say as long as the FXI stays above, this, I wouldn't say this is intermediate, but this upper support, you can't get too bearish on, Chinese stocks, and that's up 32.35. As far as, looking at the DAX and in Germany, it hasn't even, got to the 21-day. So you had a small reversal late last week right here. It'll give you some downside, but again, you're allowed to have pullback strong trends, and the trend from the lows here has been strong and still, really not in jeopardy of being broken. So at this point, minor pullbacks are, I think, more constructive than faulty.
S&P futures are up 8 to 9 handles. Seems like you covered your shorts pretty well on Thursday. What are some new levels to watch here?
I went out, everyone's like, oh, Red Dog, you're going out so short. Are you now a bear, on
Yep. Wednesday
into Thursday? But a lot of little signals said we can get a slight pull-in. And most guys out there are already talking about, a retest of the lows. For me, I was just like, we broke the 8-day moving average. Let's, see if we could test the 21-day and make some tactical money short. And what I try and do is be as transparent as possible. So by about 9:35, 9:40, I was already I covered my spiders at 202.10 or wherever it was. So anyway, if you look at the SPX, you will see that the reason why I figured that you can get a little bit of a cute short was we broke this 2040 area, which was right there, and we closed weak on Wednesday. And then I was thinking maybe we get a retest of this kind of broken descending channel into some of the moving averages, and that's pretty much what happened on Thursday. So I would say pretty constructive stance by the bulls. So I did cover some, so we're opening up. I wouldn't chase this up open. I'd write down 2000, just say 46 as being a little resistance if the bears want to come in there. And then if it, the opening gap holds, you have a bit of a higher level here at 2056. But I would say, here is your weekly pivot support. You cannot get too bearish if we hold above this 2022 this week. Maybe we go sideways, but at this point, your cute tactical short happened. If you didn't buy this down open on Thursday, just be a little bit careful in the first 30 minutes of today. If you go to the spiders, which a lot of people do trade, this also, we talked last week until we were blue in the face about this 203.80 level. That's why I went out short the spiders, and then all we did is come in and retest this spot. So if you want to write down 201.74 for the spiders, and then there is a little resistance around this. What is this? This is about this high here is 204.33. So micro resistance is there, and then you have the recent highs of the move. So, I might actually look for a cute little short if we were to get above 204 into 204.30, if I see some divergences, but otherwise, I'm going to take this morning and be a little bit more patient.
Oil is up this morning. Do you think oil and oil stocks had constructive action last week?
A lot of people, too, were saying, oh, we're still in a bear market in oil, the bounce is over. Meanwhile, we went from 25 to almost 42 and change, so a pullback, it makes sense, right? And, on Thursday, you had a down open in oil, and what happened? Same thing. I'm going to sound like a broken record today. We broke the 8-day, so if you sell when we break the 8-day, you have the luxury of also shorting there, buying back the 21-day, and maybe even getting long. So if you look here at the USO, you'll see that, again, like most other things, the upper little spot here broke with the 8-day, but what did it do? It held the 21-day. So, if you shorted on this on Wednesday and covered on Thursday, nice little cute trade. If you got out on Wednesday and got in on Thursday, same thing. So at this point, moving forward for this week, if you want to be, if you want to just look bigger picture, I would say as long as the USOs stay above last week's low of 974, I deem it pretty constructive. Some are already starting to, draw this out here in the USO where you have the left shoulder, the head, a bit of a bounce here, and then this being the right shoulder, and then all of a sudden you have a head and shoulders top pattern here in oil for lower prices. But we'll see how that goes. If you look at the XLE, you'll see it too. I went out and actually short this on Wednesday because of this small little break, and covered in the first 15 minutes, thinking once we get here the first time, perhaps it holds. So it did for now. It held even above this little pivot spot. So same thing here. I would write down this for the XLE. The XLE is 60-40. That's your new pivot for the week. Then they did some fact finding last week. But again, you do have some resistance now coming in here. So if it's up 50 cents or so, and you bought some in the hole on Thursday, maybe you trim into the up open, and if you covered here like I did, maybe you look to reshort some, and that's how you try and tactically maneuver these ranges for active cash flow as a active trader.
Small caps showed some relative weakness last week, but the IWM did hold the 21-day on Thursday. Will you look here for overall market health?
Again, you're talking about the 21-day.
Yep.
We went oil that we talked about, and now the small caps. So if you connect the dots and try and look for consistency, there you go. So you look here at the IWMs, you'll see that they did pull back. You had this small level break on Wednesday. Okay, so that was actually, it was welcomed. And then what do we do here? We held the 21-day. So if you want to draw a little bit of a support line going forward, I'd say as long as the Russell holds this now 105.74-ish spot, you can't get too bearish. But again, you don't need to chase it either. So with that being said, if you covered here, there will be some people that look to maybe short versus this 108, 108.50 spot. So if we happen to get into that, those are the same probably people that are looking for a little bit of a head and shoulders top being built here, where you have a channel where this is the left shoulder, here is the head, even though it's very minor, and they're probably thinking, oh, we could rally back to here, turn lower, and then we're going to get some kind of spring swoon. But that's also just a thought, and you can have that thought, but wait for the market to confirm it. So here is resistance 1 in the IWM, that's 108.59, and then the point of reference we have to trade on 2 is 107.22, which is Friday's high. So a bit of room to rally. If the bears want to take a stand here, they better start selling this off before we get back to the prior highs here in the Russell.
High beta tech continues to be mixed. Do you have any special thoughts on Google, Amazon, or Netflix?
They're all trading independently of each other, and I'd say Google has been a little tougher, but it did hold 750 on Thursday. If you look at the chart, it's been acting well. It's just there's no real awesome tradable pattern here in Google. So it did hold. So you want to be constructive. You could say it did hold this spot. It did hold the 750. So as long as it holds 750, can't get too bearish there. But the market's not really it doesn't have much power. That's why it failed here. So at this point, I would write down 750. If you trade Google, I'm not even going to touch it today. If it gets above Thursday's high here of 757, then you have 765. If all of a sudden it blasts off above 765, it might breed some confidence in a little bit more risk versus just the range. It's easy to come off lows, but it's harder to be higher and go higher. Talking about higher and go higher, you have Amazon. So Amazon, if you remember, look at this red dog reversal right here. You want to write down this tactic. After a 3-day pullback, it came in and it took out or traded back above this 546. 546 was your pivot right there, okay, with that low. And then remember that downgrade that happened? It downgraded, reversed, did it again. So you're talking 4 days up. There was a small article in the the Wall Street Journal, heard on the street section. So maybe people try and sell it a little bit today. I know it's up a few dollars. So if you want to try and fade a little bit versus a 15-minute high, try it. But a lot of people who've been trying that has gotten crushed. So really the best case scenario would be is just say it opens up $2, trades below Thursday's high of 583.50, then maybe short with this stop and definitely use that stop and see if it pulls in a little bit. But ultimately, this pattern here looks as if it's going to want to test this 607 And lastly, Chesley, let's talk about Netflix. It's been very lethargic, not a heck of a lot to do, and I would just almost avoid it until you see something, so different. Like if you look at this chart of Netflix, it's kind of a whole lot of nothing. Ever since this small outside day here, it's just, it gave you a move off the lows, but really hasn't had much traction. It's still below a lot of moving averages. If you just want a few points of reference to start the week, you do have this 97.07. If it holds that, maybe try and be long a little bit. If it starts breaking that, just get out of the way. Not a heck of a lot to do with Netflix lately.
Great. And I know on Thursday you bought back Facebook. Is this still the only social media stock that looks good to you?
The three of them that trade, LinkedIn and Twitter, they just, there's no continuity, but Facebook, best in breed. And I was trying to trade, Facebook and add, a lot of shares to that 102.50 pivot, and it really, didn't act well like a momentum name. It was small little moves. But then on Thursday, when I covered my shorts and things reversed, I was like, wow, Facebook's acting strong. At least let me, get back in some of that just in case it wakes up this week with the end of the, quarter. Maybe people want to mark it up, et cetera, et cetera. All in all, this ascending channel from the lows still looks good. It's still been holding the 8-day this entire time. If you used 110.50 as your stop last week, it never violated it. It poked its head above this. So, here's your next zone here. If it wants to extend, it can. So I went with this, and like I usually do is if, pre-market, it's up 50 cents, you want to trim a little bit and then make sure the strength stays and see how that goes. If you look at something like Twitter, there's really absolutely nothing going on there, okay? It gave you that, they caught some shorts off guard when, it gave you that post-earnings low, and then if you remember, we had a decent setup here where it gave you another move, but then all of a sudden you have your red dog reversal top, gave you a topping tail, and ever since then, just been kind of out of play. And there's nothing to go on here unless something comes out with a partnership, a takeover, et cetera, but most of those are just spots to be sold. And I guess let's just punch up LinkedIn as we're talking about being social. A whole lot of nothing also since this big gap down after earnings. But as we get closer to a new quarter, maybe it starts to wake up. So you'll see here if they want to do something with it pre-earnings. But LinkedIn has been a broken name and not much to do. So I would still avoid it until we get closer, which earnings for LinkedIn I don't think are for multiple weeks.
Right. There's news that Apple may revamp their 2017 Apple line. I know you've been a bit more active in the stock lately. Do you think this is a catalyst?
Well, they talk about how everyone got the 6,
Yep.
and that no one's being motivated to change their phones. That's why they went with the smaller version for
Right,
overseas.
the
So
smaller.
there you go. Did you get it yet?
No, I haven't.
All right. Good.
Maybe soon.
Okay. Well, the question is, like, if they do revamp their iPhone lines in 2017, maybe they're cool enough and they have enough gadgets that it'll spur another round of orders or even higher demand. So, I don't think, today it's going to be a catalyst, but like Chelsea said, it's been acting better. We look here, the chart, it's been holding above the 8-day. It woke up above this spot, and then it held the 8-day right here. That's when I came out with the chart of it and gave you a nice little little push. So for this week, if you want to be long verse 104.89, okay, that makes sense. And if it's going to lead a little bit this week, it's going to have to get above this 107.65, and then the 200-day has been moving lower every single week, and now that's at 110. If it's a true refresh and it's different, maybe, and you have to buy new, earphones and chargers and accessories, etc., that could be a whole new cycle for it. So maybe that helps, considering that if you look at the macro pattern of Apple really hasn't done anything, almost for 2 years now. It came in, held this, this 92 area. It's, still locked in a downtrend, since the peak here. So maybe, a whole new, fresh look with whatever, it can get going. Because we all know fundamentally Apple is said to be cheap, but technically it's been broken for, quite some time. So we'll see for the week if Apple can hold this spot and give us a trade. I am not in Apple, but, I'll be watching it this week to see if there's some kind of cash flow trade there.
We've been going over action in metals. They had a really good start to 2016, but have kind of been losing a little bit of momentum here. What are some levels in the GLD that we're looking at?
Well, if you remember the Brussels attack,
Yeah.
metals started higher and then was
Right.
sold, and that's really what lost some of the steam here and some of the momentum because, if it wasn't going to go up on a situation like that, people are like, oh, maybe it needs to come in a little bit. So you look here at the GLD, the GLDs, which is the ETF for gold, it had a lot of continuity when it broke above, the 8-day here. It rode it all the way up until it got extended, pulled back to it, got a little wishy-washy, had just one last setup where it peaked, gave you a little red dog reversal here. And then on this day, when it gapped up with the Brussels attack, it didn't go anywhere, and then all of a sudden it gapped down. So at this point, if it doesn't fill this small gap here very soon, okay, meaning like probably in the first few days of this week, you'll probably see a visit down towards the 50-day. With the 50-day, if you sold it correctly, I would look to see if the dip is buyable. And that comes a little closer to 114.23. So in order for it to get here, it's probably going to have to trade below 116.16. And then if it holds that and tries to rally a little bit, with the jobs report on Friday, the gap pivot is at 117.12 and gets filled here. But the longer this stays open, the higher the probability we see the 50-day. And the same thing if you go into the GDX, you'll see there's a pretty big gap here. So the longer that this gap stays filled, the higher the probability that this support gets taken out. So for the GDX, I would write down important supports at 1902. If it trades and closes below that, your 50-day here doesn't come into play until about 1740. So, metals have lost momentum, but not truly broken yet.
We have 4 more days left in the month and the quarter. Time is flying, right? Do you have any other thoughts as we start this week?
Well, there's a lot of people thinking like, oh my God, we came back so far so fast. The fundamentals still think that we should be broken, but the powers that will want to mark up this month or quarter, so this way you get your statement at home, like you don't think that you did so bad.
Right.
And then you have the other side of the fence that's saying, okay, we're entering earnings season, and all those buybacks that have been supporting this market start to get into a blackout period, pretty much starting today, tomorrow, but obviously companies, are scheduled at different times, some sooner, some later. So for the next, 1 to 4 weeks, some of the buy pressure, gets relieved from the market. So, maybe this week the push-pull doesn't come to a head because, again, you do have, 4 days left in the month. So any of the vested interest that wants to keep the quarterly statements looking decent will keep it there. And then you have new monthly and quarterly flows. So I think, more in like about a week or a week and a half, you're going to get a little bit more volatility pickup. So if you want to take, one more look at the SPX, again, like I've been saying, as long as we do this, you can't get to this. Well, as long as now we hold 2022, you can't get too bearish. Okay, if we do some sideways work, in the next few sessions, there could be another move if we clear here up to the 2100 level. So I would remain tactical. All stocks aren't created equal. Like we didn't go over Tesla. Like look at Tesla. Tesla had an enormous move. If you tactically got short here when it broke below a prior low for the first time as we were extended from the 8-day and went home short, you made good money. If you sold here, you had the opportunity to buy back, which we isolated in my morning note around 215. You could have also got it on the red dog reversal back up. So without being a full-fledged bull or bear, there are tactical patterns to follow. And this was a little bit of a sell signal, or if you even here, but if you pressed here saying, oh, we're going down back into the 200s because it's too highly valued, then you probably messed up a trade. So at this point, I would just take trades over the next 3-4 days, in the overall market without, making any big time bets because, it might be hard to buy up here, but it's just as hard to short, especially with 4 days left.
Right. Thank you. Everyone have a great trading day.